News Radio 700 WLW.
Not a bad day if you have stocks. It was rocking this morning. It's settled down a little bit, but got the report. Matt Reese was talking about it. The inflation number, 3.4%, highest since October 2023. Now, all this is caused by the Iran war. It's not a policy. It's nothing about energy. It's this Iran war and oil prices. Oil, though, is down. I mean, oil on June 1st was $92 a barrel. Today, it's $70 a barrel. So things seem to be heading in the right direction. But what does that mean? When will anybody feel any relief?
Well, let's talk to a guy who probably knows more than we do about it. He is our financial strategist friend. He's been doing this for nearly 50 years. He's president of Cotton Wealth Management Associates. He is Steve Cotton. Steve, welcome back. Good to have you.
Hey, Eddie and Rocky. Always glad to be with y'all.
So, Steve, you heard Rock talking there. What are we looking at here? Are we about to launch, or are we just going to slowly graduate upward, or are we going to plummet down? What the hell's going on?
Well, we've got mixed statistics at work. We had a 1.6% gross domestic product number come in the first quarter of this year, which is a slowdown, but it's still positive. Inflation, as Rocky said, is about 3.4 to 3.8, which is way down from the 9.0 that we had during the Biden years. So you got to keep that in perspective. Employment is around 4.3, which the statisticians consider basically full employment, and we've got a huge number of jobs that are open that they cannot fill, which is a good thing. But the economy is very resilient. The stock market is just one indication of that. Only about a third of the country invests in the stock market directly or indirectly through their 401ks. But it's a mixed number. But the underlying basics are extremely positive, and I think we're at the early stage of a long-term economic expansion, actually.
Oh, wow.
Okay, so you mentioned inflation right now, 3.4%, but as you stated, that's still a third less than it was during the Biden administration. Things are going the right direction. How long do you think before we might see some better prices and some better, Americans still, I think, are feeling the pain when they go to the grocery store, certainly still the gas pump, although that's getting better. When do you think some things might get better to the point where people can feel it?
Well, it's a great question. I think it's a matter of a couple of weeks. There's always a lag effect, a lag time between tanker traffic through the Strait of Hormuz, which is flowing now very well, which is part of why the international oil prices have gone down below $80 a barrel. It's $70-ish a barrel, which is very good. The trends are positive, but inflation has been kind of baked into the cost pipeline for several months, and it's going to take us another couple of 3 weeks to really start feeling that at the gas pump and in food prices and transportation prices, things like that. But the trends are good. The trends are positive. They're coming down, and there is a huge amount of potential stimulus in the domestic energy and economic pipeline coming that people forget about.
Which is?
I'll give you a great example. President Trump was over in the Middle East earlier this year, negotiated $18 to $19 trillion of new foreign investment money to come into the United States. That's point two is this fiscal year's defense budget is the first $1 trillion defense budget in American history. That has a huge positive ripple effect all throughout the economy with all the subcontractors, defense-related employees, and they're considering a $1.5 trillion defense budget for fiscal 27. And that's
Wow.
on top of no tax on tips. We've had the best year, people getting larger tax refunds for 2025, a record number of people getting tax refunds that were larger than they expected. There is all kinds of positive economic stimulus in the pipeline that is coming, and that's why I say I am very cautiously bullish that we are on the verge of a strong economic expansion for the next 5 to 10 years.
And Steve, today we got the news this morning, something with the stock market involving Micron and how that eased AI fears. Explain that to the average person, what was going on with that and why that's significant.
Well, there's been a growing concern that artificial intelligence was either overhyped and there was going to be a bubble in AI stocks, or that it would result in major job losses, especially for middle Americans, which might be more vulnerable to being replaced by artificial intelligence. I think some of that's overblown. I'm not familiar. I haven't read the latest on the Micron issue, but there's been a concern that AI is going to replace more jobs than it makes, but I don't think that's true. I think it's going to turn out like Trump's tariffs, that had a very muted effect, much less than people thought. And I think we'll see the impact of artificial intelligence really over the next 5 years. But I think it's too soon to make any judgments about that right now.
We're talking to Steve Cotton, financial strategist. And Steve, in your mind, because we talk a lot about AI on this show, I mean, for the average person, the average American, to truly feel the impact of AI, what are we looking at here? Are we looking at the 2 years, 5 years, 10 years? What are we looking at?
I think we're looking at 5 to 7 years of impact. Artificial intelligence may be able to replace some human activities, but not all. It's not going to replace the good judgment of doctors, lawyers, financial advisors like me. There are some things that people are still going to want the human expertise on, but the simpler the task, the more AI may become to be used. For example, figuring out insurance rates or writing a speech or something like that. Those are things that are already being done by ChatGPT and things like that. But I think AI is going to be like all technologies. There are going to be pros and cons, and for every job that disappears or industry that gets threatened, 2 or 3 will spring up anew, and that's the magic of the American economy.
Now, Steve, you just mentioned that you didn't feel, in your opinion, that a financial strategist, that realm like yourself, would be affected by AI. You failed to mention its effect on radio hosts. Do you have any insight on that, and how are me and Eddie looking when it comes to that?
iHeartMedia is dedicated to real humans.
Well, I think that's one of those areas that they're never going to be able to replace you with a max headroom.
Thank you. Yes, we recorded that. We're going to play that for our bosses.
You guys are safer than most of us.
Well, Steve, we appreciate. We'll let you go on that thought, my friend.
Great stuff.
But before we let you go again, so you're issuing a strong buy basically for the American economy until as we go into the second half for this year.
Absolutely. If you look at Elon Musk's SpaceX and all the associated initiatives and companies with that effort, Elon Musk is almost single-handedly building the space economy of the future. You couple that with our defense budget spending, you couple that with new discoveries, nanotechnology, biogenetics, and I could go on and on. This American economy is robust, is resilient, and is going to be in expansion mode for the next 10 to 20 years.
All right, Steve Cotton, always love talking to you, man. Where can people go to find out more about you?
Well, I'm based in Dallas, but I've got clients all over the country. Our website is cottonwma.com, and we just love helping families and businesses, churches, and foundations. But we are a small client-focused firm with a big heart and very knowledgeable hands.
Steve, thanks so much, man.
Thank you, buddy.